Welcome to Money Hangout once again, our weekly interaction in which we share, uh, we talk about one particular subject which might be a burning issue, and try and answer your question, uh, fulfill your all the queries that you may have, particularly on mutual fund and investment issues. This is brought to you by Birla Sun Life Mutual Fund and Value Research. Today we are going to talk about how many mutual funds should you hold, how many should you have, uh, and this is one of the most frequently asked questions from all the investors who got initiated to mutual fund over a period of time, and now they are faced with this question and finding the optimum level. How much is good enough, and how many are too many? And this is quite understandable. Most investors accidentally started investing in mutual fund. Till not very long ago, mutual funds, companies used to come up with new fund offers, claiming as something special. Investors will fall for it, and they used to invest in those, listening to the hypothesis, listening to the thesis or the story that what is the promise of the new fund. And the net result of all this is that we have come across many investors who have 20 funds, 30 funds, and they are today faced with a situation that uh, they are in a state of confusion. They don't know what is happening to their portfolio. They have to monitor too many. They lose interest sometimes. They lack the focus in terms of, they might think that they have their money is doing well, but some funds do well, some funds don't do well. So they have lost they have lost the framework. So it is important to use this financial year end to reorganize your portfolio. If you have too many, I'm just going to share with you uh, all the understanding, all that should go into understanding that how many should you have, and why you should not have just too many of them, and why it is a futile exercise. The reason why you invest in a mutual fund is that you are able to gain diversification instantly. And there isn't a clear answer to this question that how many funds should you have. Because I think even one fund is good enough for a person who is making 5,000 rupee investment, and that is all that he can save right now. It is a good way to start. Choose a balanced fund, and you don't need to diversify beyond a point. Just make sure that you are careful in your selection. Choose a balanced fund whose equity component is well diversified across times, so that you don't get a disappointing or a very wild experience from such a fund. And so for those situations, even one fund is good enough. It is meeting the basic threshold of your diversification needs. But the moment you are able to save little more, your investments are more, and managing 2 3 funds, 4 funds should not be a bad idea. uh, the reason why investors have too many funds is that you had the NFOs. We did, and many a times we are actually going by the then prevailing numbers. Investors chase performance, and the funds which are doing well, we end up buying them. And at different point of time, different kind of funds or different funds are doing well, so end up with a large collection. uh, I think for all those investors who have some meaningful interest in mutual fund, now their investment has scaled up. I would say that most investors' needs are fulfilled. Let me just explain what those needs are. The needs are fairly straightforward. First need that you need to diversify, that is met by investing in a mutual fund. After that, fund managers leave, and fund performance is extremely vulnerable to the person who is managing it. So you should diversify across style. Also, even if the fund manager is not leaving, the problem is that many investment as an endeavor is a cyclical one. There are sectors which are cyclical. There are industries or the companies or the economies, and likewise the fund manager's mindset. There are various kinds of fund managers. There are fund managers who invest looking at the downside. There are fund managers who look at the who are dreamers, who who invest in great stories and they turn out to be true. many of the good funds with a good performance over a full market cycle, you make money by investing in either of them. The problem is that they do well at different times, and you end up having many of them. So having spread your money over varying skills, different people, is just as important once your once your stakes are high. So that is the reason why you should have little more than one. You should have few of them. But I think for most, and the real problem of having too many funds is that you end up, generally speaking, a good diversified fund might have 30 to 40 stocks. The moment you have another one, there will be a complementary position. Two funds might have 20 positions, which will be common to both. The moment you have 10 of them, you will have a lot of complementary stuff, and then your portfolio will be very widely spread, and that really does not serve the purpose. You end up actually getting your investment, despite chosen good funds over a period of time which were good funds then, you end up with a portfolio which is too diversified. It lacks the focus. You don't know, and you lose interest. The moment you think of a situation that you have 10 lakh rupee invested in mutual fund, of which there are 15 funds in which you have invested 15,000, 20,000 over a period of time. When they do poorly, you don't ask question, because we are generally averse to selling our losers. And when they do well, you feel happy. But feeling happy is not good enough, because your position in those funds is just too small for it to be meaningful. So having meaningful stake in a fund is just as important, and having 3-4 funds is good enough, because the underlying portfolios are 30-40 stocks. So if you are if you are holding 3-4 funds, your portfolio will be about 60, 70, 80 stocks, and your money is entrusted to 4 capable managers, or 3 capable managers, or you think who are capable and you believe in them. And then when they do poorly, you get serious about it. Right now you don't, and because your money is very fragmented and spread over a number of investment. So my suggestion is that don't have more than 3-4 funds for your long-term investment. Choose your path. Make it with a multi-cap funds, generally speaking. Or if you are a very conservative investor, you are not still reconciled to the big ups and downs, maybe build it with your 3-4 balanced funds, or maybe 3-4 multi-cap funds. If you are a very aggressive investor, maybe consider having marginally higher tilt to mid and small cap funds, maybe 2 multi-cap fund, and support it with 2-3 aggressive growth funds like mid cap and small caps, the funds which can prove to be very volatile, yet can prove to be more rewarding. So if you do this, of course, this does not really undermine your basic approach to investment, that you should be allocating your long-term money, you should be investing regularly, and you should not be looking at short-term performance to take a sell call. So once you have done this, I think 3-4 funds are good enough for most investors. Of course, it should also be compliant with that. Your first 1.5 lakh rupee, you can well build that portfolio with a tax saving fund. But my understanding is that having 3-4 funds and not getting distracted, reviewing your portfolio every 3-4 months, even annually, and then taking a call, moving your money if the fund is a consistent underperformer, choosing a fund which has been a consistent performer, and and investing through a full market cycle. I think this will come in as a very handy framework for you, that how many should you have. Having more than 5-7 funds is a futile exercise. You end up being end up owning an index fund, bearing the cost of an actively managed fund, which is quite substantially high as compared to actively managed fund, and then without the guarantee that you will beat the index, without the guarantee that you will be consistently matching the index at least. I would say that get focused, choose your funds carefully, invest meaningfully, and this is not a compromise on diversification. It is not a compromise on missing on any opportunity. You will be interested, and you will have a greater control, and you don't necessarily need to add more funds. Having 3-4 funds, invest. This is also a very frequent question which I get, that somebody is investing 50,000 rupees in 4 funds or 5 funds, and he wants to save 10,000 rupees more or add 10,000 rupee more, the normal question is that which fund to add. Don't add. If you are happy with your 4 funds, they have done well, you believe in them, don't expand it. Invest 2,500 rupees extra more in the same funds that you have, or 2,000 rupees more in the same fund that you have, and it will not be a compromise, and this will translate into something very meaningful, because your active periodic review and monitoring and being interested will be one of the very crucial contribution to your general well-being, or your portfolio doing exceedingly well.